All right, how's everybody doing today? Welcome back to the channel. So today we're going to be talking about options and in my opinion, why 99% of you guys watching right now should never even try it, why it's like very dangerous to do, and overall it isn't a sure way to make money at all within the stock market. It's probably one of the worst ways to make money within the stock market. I'm going to be telling you everything in this video. Now, this is my opinion. Obviously, there's people out there that do it relatively safely, but overall, most people, especially the examples I'm showing you today, hopefully should like scare you if you haven't been into options to basically not go into it or just not go into it at all and just focus on basically what I do on this channel, which is fundamental investing in the stock market. So basically, if you don't know what it is, it's basically you're getting the right to buy a certain amount of shares or sell at a specific price, and then you have a specific period of time to do so. So if the stock price doesn't go to that, if it doesn't reach your call or put, you're basically going to be left with a lot of gains or a lot of losses. So this may seem like a gambling sort of scenario, but when you put in the premiums within it, like profit does not come easy because of the premiums. So even if you can, it's a 50-50 chance, right? It goes up, you make money, it goes down, you lose money. But it's not that simple because of all the premiums, etc. So for example, I'm just having the Robinhood SPY puts, right? This is like the most popular ETF that people actually use for options. Let's say you wanted to go to, let's say you're like bearish and you wanted to go to like 280. All right, you're gonna have to pay just to break even. It's gonna have to go down 0.1%. And that's just to break even. So right away you're already at a loss as soon as you buy it. So obviously this is like not the most risky thing you can do. Not even mentioning, let's say you put a freaking call on Hertz stock, for example. But this is like just in general. These are some examples, right? Of how this is Wallstreetbets. If in Twitter, I'm sure you guys have heard of it. If not, it's where people do like crazy bets and stuff like that on the stock market. This is one person. He lost 98.7% of his portfolio in the span of 3 months. In just 3 months, he went from $500,000, a lot of money. He's in a good situation. Now he only has $5,000. He can't even buy a car anymore. He went from being able to afford a house in cash to barely being able to buy a car from trading options. This is not good. I don't know exactly what he did, but this is like verified. This is not good. This should not happen in an ordinary stock. Let's say you invest in like a penny stock, that has a chance of going to zero too as well. But chances are, if you have this much money, you're not going to be investing in a penny stock. You're going to be investing in more better things. But with options, that isn't the case. You can literally invest in a safe company, buy their stock options, and it goes down short term. You lost money. That might be the best company in the world, but just short term it's going down, so you lost money. Like let's say you buy Apple stock at I don't know, $200, and you think it's gonna go to 300. Let's say you bought it here at around like 250. You think it's gonna go up, so you buy it for the next few weeks. It goes from 350 to like 340, and you lost a good amount of money. Or you bought it here at 250 and it went all the way down to 225. You lost a good amount of money because your puts are set here, and then you're screwed because you're investing short term and it goes up. And you're left screwed. Obviously, you can catch a good market with an option, but in the grand scheme of things, most people cannot time markets. It's factual that most people that day trade lose money. Same goes with options. So like I would definitely, if you want to try out options, like if you're very eager to start with a small sum of money, please don't start off with $500,000. Don't even go with 500,000, even if you think you're good at it, because unless you're doing like crazy safe stuff, like I don't know, like setting premiums with collateral and stuff, that's very simple. That's more in depth. I don't know exactly how that works, but unless you're doing like really safe stuff, in general, you're gonna lose money. 99.9% of the time, you're probably gonna not make enough money if you do options long term, especially. Like if you do options consistently, you're not gonna make a profit because of those premiums. You might get lucky and it just explodes. You might put a call on a Tesla stock and you think it's gonna do good, then it does good. The only time maybe if you want to go, in my opinion, is let's say you have a lot of money in a stock, you want to kind of hedge your bet, so you're gonna put puts on it because you think it might go down because you know something with earnings or something, so you think it might go down. Then you can put a small amount of puts onto it just in case, kind of hedging your bet. That way, even if it goes up, you're still making money because you have a lot of money in that stock. I've seen a lot of people do this, and I haven't done it personally, but I do know people that have done this and are pretty happy with it, with actually like using options to kind of hedge your bet a little bit. But other than that, I do not think it's good. I think this is another example. There you go. This is a crazy example. This is actually, I believe this is verified. Yeah, it is. This guy lost 100% of his earnings, man. Look at that. You can actually tell that he started off low. That means he bought the stock option already at a loss. And this, man, that's terrible. I don't know, have any other information in this, but he lost 150,000 in 3 months, 100% of his money. I think he just waited for his contract to be expired. Which a lot of people don't do. But if you just wait for your contract to be expired, it's worthless. I think that's maybe what happened here, or he just withdrawed his money to get this screenshot. But nonetheless, he lost 150,000, which is freaking terrible. Like this is like, even if you buy Hertz stock and it goes bankrupt, you can still sell the stock at like not 100% loss. Like you can probably sell Hertz stock at like an 80% loss. You still have some money left over, but options are the only thing where you can have a lot of money in it, but you can still lose pretty much all of it. Like you can have Hertz at 15 and then sell it at like $5 after it goes bankrupt, which is like what a 70% loss, 80% loss, but at least it's not 100% loss at the end of the day, which makes just options really dangerous in general. Now, if you don't want to learn it, if you're just interested in stock options, go all for it. But in terms of actually investing, the sure way to actually make consistent profits in the stock market isn't by options. It's by investing in good companies long term, looking at the fundamentals, and actually just doing it that way. So hopefully you guys did enjoy this video. This is my opinion for stock options. Obviously, there's fact to it that it is very dangerous. So just be cautious. I've seen a lot of people lose money. So hopefully you guys enjoyed this video. Thank you guys for watching. Make sure to subscribe on this channel. I'm trying to hit 1,000 subscribers by the end of this year. So if any of you guys can help me out, that would be really appreciated. And I'll see you on my next video.